Hey guys, this is a market update. In this video, I'm going to look at the three major catalysts that everyone is going to be trading off over the next 6 to 12 months. We are right in that part of the cycle now where Bitcoin recovers and then just moves into new all-time highs. That's what's happened in every previous cycle. We have data here from Fidelity that shows how much it moves, when it moves, and how many days it takes from the halving or from the bottom to the next peak. So we're going to look at this and see if history may or may not repeat itself, and then just look at some fundamentals about when are these things going to occur, which is the catalyst for the price change. So we'll look at that in this video. I'll leave timestamps for everything down below as well. Let's get to the Bitcoin price. Firstly, I know a lot of people are saying Bitcoin is boring right now. It is the summer, not many people are trading, volumes are lower. So you get this volatility compression here for 6-7 weeks. However, taking a step back from December last year, we are still within this uptrend, this ascending wedge. Now, the thing that's going to break us through either up or down is the ETF news with Grayscale and the SEC. Q3 this year, they are expecting a decision from the court, which is going to decide either way, in Grayscale's favor or maybe in the SEC's favor. This is the fundamental catalyst that will see us either potentially get some weakness down to this 25 level, or if it's positive, we should see a lot of buying in Bitcoin as well. And I'll cover the details of that towards the end of this video. If you're a short-term trader, you want to have that in your mind, taking positions here. As of right now, I think we are just going to move sideways here with not much because it's fundamentally driven, not technicals driven at this point in time. If you're a trader though, check out the Bybit deposit bonus in the description. If you make a deposit and trade, you can get up to $30,000. So check the link below for that. Firstly, I want to look at this data from Fidelity though. It shows us exactly how Bitcoin performs throughout cycles and how long it takes for each part of it. So in the top left, 0%, that is the all-time high for the previous 3 cycles, orange being this cycle that we're in right now. So we can see it's taken around the same amount of time for the drawdown and also around the same percentage drawdown. So in previous cycles, it actually became lower in terms of percent drawdown. This cycle around 75%, and we have recovered pretty well in this part of the cycle. Now, the 2017 cycle actually outperformed. However, this cycle is outperforming the 2013 cycle. From here, though, it really depends on central banks' monetary policy and what they're doing. And so we may have, according to previous cycles, if we think Bitcoin is a macro asset, another 6, 8, 9, 10 months of potentially sideways, or, if some good news with the ETFs comes along, then that will push us up. But it's not really the recovery to all-time highs that we're in right now. It's going to take a massive shift in central bank policy to get us there. And that's not really where we are right now. And so you can see previous cycles, you're looking around 1,000 to 1,200 days from the all-time high to recovering it. And so we're nowhere near that yet. It's going to take all of the 3 catalysts, which is the halving and also the ETFs and also central bank policy reversing. All of that, whilst that plays out, that's going to be the recovery. And so that may not happen until next year, maybe this time next year, in my opinion. So yes, we can get some good news from the ETFs, which is micro based, but the macro stuff is going to take a lot longer. And as Bitcoin is a macro asset and it's seen to follow, the macro a lot in previous cycles, we may not just be there right now. So we could be seeing another 12 months or so where the price could definitely appreciate, go sideways, but the real recovery doesn't happen maybe for a lot longer when the central banks really do flip, and they're nowhere really near that right now. Now we can see this as well, which I will put on the chart at the end of this video. So make sure you see that because I will label all of this in terms of timelines. When you have the halving, in previous halvings, we can see that it took around 300 to 500 days after the halving for the new all-time high. So I'm going to label this on the chart for this halving as well. The first halving, it took 371 days. The second, 525, and then the third, 546. For this halving, we don't know. It does depend on everything and all of the ducks being in a row, including central bank policy. But we will see at the end of this video, 546 days after the halving is looking at actually 2025 potentially for a top. And there's a lot to go on during that time. So looking for, recovery of the all-time high price within the next 6 months, I think is just completely not going to happen. But we could get some, very volatile price action around the ETFs and the court case as well, which is definitely tradable. So the first catalyst is the halving, and it is important, but the second catalyst is way more important in my opinion, which is central banks and what they're doing. If they're trying specifically to devalue the dollar, pump money into the system, that is going to be the thing that pumps us to a new all-time high, but that may not be coming for a long time. So let's have a look at this. Investment banks are starting to flip the rhetoric a little bit and actually looking forward to rate cuts. So they actually think that the Fed is done in terms of rate hikes. They think the interest rates are high enough, and that from here, we know that there's a period of time between they actually start cutting again. So let's have a look at this. Goldman pencils in first Fed rate cut for the second quarter of 2024. They don't believe that any more rate hikes are coming. They think that they are going to skip the hike next month and then conclude at the November meeting that the core inflation trend has slowed enough to make a final hike unnecessary. So Goldman Sachs are not necessarily correct here, but you can see that people are starting to think about that because of how the data is going. Why this is important is because we know exactly how the markets behave, usually at this period in time. So the average time between the last Fed rate hike and the first cut is around 6 months. And this is data going back for economic cycles since 1980. So we know that within 6 months or so, that's usually when the Fed will start cutting again. The minimum time was 1 month and the maximum time was 15 months. So it's important not to extrapolate current data and say, well, we think inflation is going to be higher than we think until 2025. That doesn't usually happen. What usually happens is that something breaks, either unemployment ticks up or you get some deflationary shock, some investment bank or something else, part of the economy, obviously goes into liquidation or something, and that causes this kind of deflationary wave, and then the central bank steps in again. So is that going to happen? We just don't know. We don't know if there's going to be a shock or if it's going to kind of work itself out. We don't know that. However, what we do know is around 6 or so months. So we're looking at potentially the start of Q2 next year, they're actually going to start cutting rates. That works out as well because there is a presidential election next year and they're going to want rates lower and pumping up the markets for that. We can see that within 6 months and 1 year of the last rate hike, the market usually does quite well. That's my base case here. And so I think that the markets are going to be pumping in some liquidity maybe next year, but not this year. We can also see that Bitcoin really does follow central bank balance sheets as well. So we can see as central bank balance sheets, this is the ECB in Europe, Fed, BOJ, Bank of China, as they increase liquidity and take, assets onto their balance sheet, which is essentially, money printing to buy assets to force rates lower, increase liquidity into the system. When that happens, Bitcoin reacts to the upside as well. As we can see here, we had a huge drawdown during this bear market. It seems to be recovering a little bit. I don't think this is going to start happening this year unless we get some sort of crisis, but maybe next year, depending on what the economy is doing, they may do this. So this is both good and bad news. Of course, if they're having to pump money into the economy, this means the economy is not doing too well. So there's a double-edged sword here, and there will be a lot of volatility around that if we get some blow-ups within the economy. However, long-term investor, this is usually what happens, right? You usually get an increase in the balance sheet. At that point, Bitcoin is going to protect you from any currency debasement that's happening. And so that's why people will own BTC. But we're seeing this right here coming into potentially a new upwave, maybe towards the middle of next year, somewhere like that. The third catalyst is ultra short term, and it's completely binary. So if you are trading, look for these dates. Grayscale have been in court with the SEC. They sued the SEC because the SEC didn't give them a spot Bitcoin ETF. So they went to court against the SEC. And it looks like a lot of people are in favor of Grayscale winning here. This is going to be sorted by the end of the third quarter this year. And so good or bad news is going to move the price of Bitcoin. I believe a lot of traders are placing their bets on this. So as we can see here, according to this analyst, Grayscale has a 70% chance of winning its lawsuit against the SEC in the company's bid to convert the Bitcoin Trust into a Bitcoin ETF. The odds increased from 40% after oral arguments. So this is important because, as we've seen, all of these firms now have all applied for these Bitcoin ETFs together. And, that probably is because of what's happening in the Grayscale case. I'm sure the lawyers are looking at this and thinking they've actually got a good chance of winning. And so if they win, then the SEC's hand may be forced and they won't be able to delay all of these ETF applications again. Now, I believe this SEC does not want to apply or accept for any ETFs. They've been told from the top to mire the industry in uncertainty for as long as possible. And so I think we're going to be dragged out until next year for these ETF proposals, even if we get a good decision in the third quarter of this year. If you're trading short term, though, it doesn't really matter. You're looking to trade the result of the court case and not the ETF applications. That's actually two potential trades right there, because these will not be accepted at the same time as the court case is decided upon. So according to Fidelity's research and all of the other catalysts, here is the outlook for the next few years. Grayscale versus SEC within the next month, and then the ETF proposals. These are the last deadlines right here. Now, if these both go very well for Bitcoin, it is of course going to actually start rising a lot faster than in previous cycles. We haven't had this in previous cycles. So this could either be very good for BTC or just really mediocre if it just gets pushed back and back and back and we don't get anything from the SEC. So we just don't know how that is going to react. But then you have potentially rate cuts, which is around a 9-month pause from the last rate hike to the first rate cut. That would be coming a few months after the halving, which is this blue line right here. And then usually a return to an all-time high would see us around October 24. That would see us at 69 again, which would be around here. If we stick to previous cycles, of course, we could be earlier, we could be later, we just don't know. Or, it may not ever return there. Halving cycle top usually comes at this point. Around May 25 would be the halving cycle top, the actual top for that cycle. We don't know where that would come. But again, if we follow a similar pattern to previous cycles, these are the dates and levels where you'd expect the Bitcoin price to be. Of course, previous performance cannot show us where things are going to go in the future, and a lot of uncertainty around rate cuts, ETFs, and Grayscale. They may happen favorably, they just may not. So within the next month, we could get a big win for crypto if Grayscale win their battle against the SEC. Doesn't necessarily mean we get ETF straight away, though. Within the next month, which is this period here, we are going to get a massive breakout of this range. I don't know how the court case is going to go, but it's definitely a tradable event. If you are a trader, check out the deposit bonus to Bybit. Link in description for that up to 30,000. You can check the details below. I'm James, it's MoneyTG. Cheers for watching, and I'll see you in the next one.